Welcome back to another episode of the Anatomy of the Trade, and today we have a very special episode. Today we're not going to look at any of the trades that we've done before. We're not going to look at the market. You guys know what's happening. We've been talking about the market for the last two sessions, so no need to do that. Today we're going to show you an exercise, which we actually do in our classes. It's a tape reading exercise, and it also is going to coincide with the very interesting offer that we are having at Wyckoff Analytics for the next 3 months. A lot of you have been asking us and me personally, how could I learn the tape reading? And a lot of you have expressed the desire to learn the tape reading because you see the benefits of tape reading. Tape reading is not just a forgotten skill. And even though it's not as popular as it was, let's say, 100 years ago, where people, were looking at the tape, reading the price and volume numbers, and we're trying to figure out, the direction or the timing of the price movement. It's a little bit more complicated now, and we obviously add in a lot of our own Wyckoffian spin to it, meaning that we look at the price structure and combine it with our tape reading techniques. So we are extremely excited to announce this new course that is going to start on October 8th. So this is going to be next week, next Thursday. And we're going to have 3 major series in this course. And this course, what's also exciting about this is that I've been looking for the tape readers who are teachers. And I wanted, as you guys know, I love teaching with other teachers, who I consider experts. So I found the teachers and invited the teachers that I know that have, Wyckoffian background and they're extremely good tape readers. So we're going to have guests here. We're going to have different series and we're going to have different curriculum. We're going to start with the foundational principles of tape reading, and I'm going to conduct this myself. We're going to talk about basic to intermediate concepts. We're going to go into the detailed bar-by-bar analysis. Today, we're going to show a lot of elements of this initial course in this exercise. So if you are going to follow us and going to go through this whole exercise, well, hopefully, you'll decide to join us. We'll talk about the Wyckoff law of supply and demand, effort versus result. In my opinion, effort versus result is the main law in tape reading and just in general chart reading. We will talk about swing analysis, and we will contextualize our tape reading with the Wyckoffian price structure. We'll talk about tape reading of point and figure and volume, which is extremely valuable. And we'll also, revisit, and I'm sure a lot of you already know about horizontal volume and price tape reading, so we'll do that as well. Now, each session is going to have some kind of drills and exercises, so it's not going to be just, you sitting there and observing. I will be actively asking you to, at least in your mind, or maybe, if you would like to volunteer, to go through the exercise with me. And today, together with Franz, we're going to do exactly that. Now, after the first 3 sessions in October is going to be concluded by a free session to those who's going to sign up for the first series with Gary Fullett. Now, Gary Fullett is a big friend of ours. He has taught at Wyckoff Analytics multiple times. We love Gary. We love his view on tape reading and the way how he does that. So he's going to talk about tape reading without the time constraints, which is a very interesting concept, and I'm assuming that is also going to be about the PNF. And then an extremely exciting event as David Wise joins us in November for 3 sessions on tape reading. David and I have been conversing about these 3 sessions, and we're extremely excited to bring to you intermediate and to advanced tape reading concepts. We're going to talk about the original R.D. Wyckoff tape reading techniques. We'll talk about the logic and the history of the Wise wave indicator and his cumulative wave. So he's going to put on the chart, he's going to explain exactly what he sees on the chart, why he reads his numbers the way that he does. And then obviously swing and bar analysis will be presented as well. Now, something very interesting with this session is that I'm going to become, for about 30-40 minutes, a student of David, and he's going to put a chart for me, and I'm going to try to decipher the chart and go, and tape read the chart. And as usual, all of the interactivity with our students are going to be either present in the class, or we're going to have some kind of homeworks. Then series number 3, we are introducing a new face to our Wyckoff community. His name is William Redon, and he resides in the UK, and he is a Wyckoffian, and he is a deep thinker about the tape reader and the practitioner, a very practical trader who uses tape reading in his trading. So I found William on Twitter and then checked out his work, and he's a real deal. So he has a speciality, and his specialty is in the intraday and short-term swing tape reading. So we're going to do exactly that. And we're also going to concentrate on S&P 500 E-minis, oil E-minis, other futures, and some stocks, because that's what he does. We'll talk about tape reading in the multiple time frames. And again, I'm going to become a student for one of the exercises in the series, so you will see how I analyze the chart and how I tape read the chart. As always, we'll have the exercises and some homeworks for you. So a very exciting course for the next 3 months. I decided to jump into the tape reading more in depth with you guys, and just to spend the whole fall and the beginning of winter talking about those concepts, understanding them, and practically applying them on charts. Franz, are you going to attend?
Absolutely, Roman. This is the next level. When I first started attending your lectures, your online lectures, the whole issue was, understanding the structure, understanding the events within a trading range, how we label, this sort of thing. So I mastered that, but that's just like scratching the surface of how far this whole Wyckoff analysis methodology can take us. And as I've, progressed as your student, following this idea of effort versus result, reading it on the tape, seeing how this is playing out, it just moves you to a whole nother level of understanding of what's going on in the market. And what I really hope to get out of this, and I'm so excited about the additional lectures that you've got coming on, because I love David Weiss. I'm not that familiar with William. I started following him on Twitter, and I think this morning he had a really interesting post of a trade that he'd done, and how he reads the chart. So, doing this tape reading analysis, what it eventually, I think, is going to lead me to is really this ability that I've noticed in practitioners like yourself of being able to anticipate better what's going to happen in the future, which I think will just make me a better trader. So yeah, I'm really looking forward to this.
Well, yeah, it's very exciting. I'm excited myself. I mean, I'm excited for people who's going to join us. I'm excited, for the material itself. I'm excited that we finally going to have this course, and this is the course that not just, me going through all of the concepts again, I just enjoy teaching with other teachers, with other professionals. So this is going to be something very, very exciting. We are looking forward to seeing you in this series. I would highly, highly recommend for anybody. Okay, well, what are we going to do today? Today, we're going to show you a tape reading exercise, which we usually do in our classes in the live environment. You don't have to look at the symbol. It's just kind of like not what we do. What we do is we are trying to look at the chart, understand the Wyckoff structure, and then apply tape reading techniques. So we're starting at this last point. And by the way, TradingView, just want to give some kudos to the software, has a replay function. And you could find it right here at the top. So when you press it, this box comes out, and you could regulate, stopping, playing of the tape, and then the speed with which this tape, unfolds. So would highly recommend this as an exercise. You don't have to have a partner. You could do this on your own. And I would start something like this, where wherever you start, you see some kind of structure and you want to analyze it first. So, Franz, why don't you do this really quickly, and then we'll just go from there.
Okay. Well, first we see an uptrend feeding into this kind of a buying climax that occurs in late 2014. We see a distinct change of behavior, which leads to a change of character, and we leave the trend and we enter a trading range. So as Roman's starting to label here, we've got phase A with our buying climax, our automatic reaction, and our secondary test. And then we go through a number of tests throughout the trading range, which is typical of phase B, where supply and demand are duking it out and trying to determine what the overall bias is going to be. Can supply be absorbed, the supply that's coming in? Can it be absorbed and allow demand then to establish another uptrend coming out of this? Or will supply eventually overcome the demand that's present and lead to a distribution? So that's where we are at this point. We're still, it looks like we may have in September at least made an attempt to create some sort of a event, a final washout of supply that we would call phase C, where we have, supply being presented in sort of a weak hands capitulation situation, where this we call the CO absorbs the last of it, and then we have an opportunity after a test, which Roman is labeling here, to move up at least to the bound of the upper resistance of the trading range. And I think that's where we are at this point. So what's going to happen here, I guess, is the next question.
Yes.
How did I do?
Yeah, really well, really well. So we definitely, can observe different type of textures and environments that, price goes through. So right here, we still would be thinking that the bias is to the upside. It's bullish. And we kind of see all of those characteristics, multiple tests, and then rejection at the support level. The price always comes back off the support and comes back relatively quick. So that's usually a bullish sign, and therefore it leads to a rally. The rally commits to the upside. At some point, we would be even thinking, could it be a sign of strength or an upthrust? And then it just fails multiple times, and fails into a shakeout type of action. So we know that this was phase B. Now, at this point, we're going to assume that this is phase C and this is a sprint with the test. And we would need to have some kind of sign of strength. If this is a reaccumulation, a sign of strength has to unfold. And a sign of strength is a change of behavior of its own. It's a rally that has expanding characteristics both in price and in volume signature. Well, there are some increases in volume. Here are some increases in the spread. But the most important thing is that we have to overcome the resistance cluster that was created before in phases A and B. So this area right here is going to be very crucial whether we're gonna continue this move or we're gonna fail. And if we're gonna fail, then we would have to relabel this whole thing. So as you could see, labeling is not necessarily a very linear thinking. You really have to observe the price and go with what the price does rather than just, kind of like in a very linear thinking, um, label everything right away and give it the bias. So let's go to the last trading range and just maybe a little bit more on that. So how would we interpret the last trading range, Franz?
Well, we see after the test, we see some momentum that is pushing price up. We see one supply bar come in, which is absorbed nicely, and price then is able to continue to move up to just overtake actually the supply bar that I was looking at was right below where you've got the momentum, that M with the up arrow. So that first little supply bar, but that gets absorbed. We move up, and then as we penetrate the resistance area of the trading range, we have a bar that's somewhat of a volume spike, and it's got some supply coming in. So that's telling us that at this point, we're at least going to go into some sort of a pattern where we're duking it out with supply to see if we can, continue to move higher.
Mm-hmm.
And we have a bit of a reaction, which is on relatively low supply. So that's somewhat encouraging. That first little reaction looks nice. Then we have sort of a half-hearted attempt to go back up, which just slightly up thrusts this little range that we're in. And we see some more supply coming in sort of a halting manner as this next reaction, it's up and down, up and down, up and down, but the overall trend is down. So there's supply there. Then we have an attempt to go back up. More supply comes in, and that volume spike looks pretty threatening. But is it? What is the result of all this effort? To me, it doesn't look like the result is something that necessarily was the intention of the result, which was to push us back down, well back down into the trading range. We don't do that. And then we start to recover, but demand is still a little bit hesitant. So, here we are.
Okay. Yeah. So please remember what decision we have to make here. We have to make an observation on either continuation of the upward movement or a failure of this pattern. So this is what we're trying to solve here. Franz was talking about this bar right here, the big bar was the big volume spike, so obviously a lot of supply. Some demand there as well because we are undergoing below the support and then we are recovering. The same happened here. This was a really good observation. There was less supply, and look how demand was much more dynamic as what we have right now. So we just, analoging this two places, and we're seeing that, demand is not as active. It doesn't necessarily mean that the rally is not going to unfold. Why? Because supply could be a little bit more exhausted, and demand could move the price without a lot of supply. But if the price fails this level, then most likely we're going to revisit this area right here, just because we are, since this high, in this area right here, we're somewhat in the bearish, environment because we had this big reaction to the downside. We've come to the levels where previously we couldn't overcome the resistance level, and we're bouncing against them again. So, and that's the concern here. So a failure below this level again would be probably be giving us some kind of trade to the downside, and then the breakout out of here obviously would negate the previous assumption. And obviously we want to see a sign of strength a little bit more dynamic. We want to see, like, if there is a pause, that it's a little bit of a temporary pause and then almost immediate continuation to the upside. Except for this area right here where momentum has increased, as Franz was describing, we so far don't see anything else that is screaming like, buy me right now. So we could potentially, if we're thinking that we're going to overcome, we could potentially have a trade here. But I think a more logical place would be to wait for this resistance to show that it could actually go here and have some absorption of supply in this area, and then open the trade somewhere here rather than around the, below the resistance and around the support. Okay, well, let's just go bar by bar. And what I'm doing is just basically pressing the replay. Here's this rally. Okay, so Franz, I'm giving us a little bit more data here. What do you think right now?
That looks a little bit more questionable, except again, this last selling bar that came in on the gap was not able to overcome the previous low. So, I'm maybe clinging by my fingernails here, but it still didn't have necessarily the intention that the sellers might have intended, the intention they intended. So we'll just have to see, Roman. There is a little bit of demand that tries to stop this, but this gap is definitely has me worried.
Yeah, and it's not the first gap here, right? So we have the first gap somewhere here, a more significant gap. Supply was coming in, increasing. Supply increased again, so producing either a spring or a sign of weakness. So how would a spring be confirmed? With the spring, we need to overcome the resistance level in phase D and commit to the upside in the sign of strength manner. We didn't do that. Instead, the demand started to go down. So this decrease in demand characteristics is very important in this regard, because look at how demand was increasing on the rally. Look at how the next rally demand is decreasing, and it's decreasing even more on this rally. So our demand signature is deteriorating, and the price is starting to have smaller rallies, and they conclude at the lower high level. So we know that the demand is poor at this point of time, and that's why supply, somewhat in the control after, the change of this background, bias from bullish to more bearish, if we would look just like from this top right here. So it seems to me that supply is somewhat better, is somewhat more in control. We can't overcome specific highs here in the Wyckoff structure. So we could just, really fail here below. And this attempt to stop where there is some demand, maybe there's going to be some kind of attempt to go into the gap, but probably not going to be very strong, and we could kind of like fail like this. If we're going to fail here, we're not necessarily going to have, the increased speed like this, but the aggressiveness of the supply suggests if failure happens, the speed is going to be actually, quite substantial. So we'll have to see whether we could match this on the failure or not. Now, in the bullish case scenario here, we still need more constructive action. We need the price to stop here and not go down, and we need to consolidate more, because this volatility has to go away, and then for absorption to take place, and then a movement to the upside. So I would say that at this point, some kind of a little bit more bearish bias and we just have to see what's going to happen next. And we're trying to find maybe like a place for a trade. So usually when we do this type of exercise, we usually do exactly that. Okay. Oh, and obviously too fast, so I'm gonna move the speed button a little bit, to the, to decrease the speed. So we're breaking to the downside, and we are doing this on the increased supply signature, and that comes after this gap where demand was not able to take us to the new high and created a lower high. So a breakout trade somewhere here in this area would be advisable, because we're thinking that our targets are somewhere here, could be even lower than that. So we'll have to see. Okay, Franz, well, let's imagine that, we do have that trade on. Let's say like we have 1 unit on here. How would we trade it? Let's assume that we are in this position. Tell me when we would do something.
Oh, whoop.
Okay.
Um, on any sort, if we're targeting kind of the 116 area near the bottom of that of this supply area, then any kind of a rally attempt, I don't know if you call that a rally attempt, but any kind of a situation where demand tries to come in and isn't able to. So those two bars were not able to get back above the even the open of the previous bar, certainly not the high of it, and then starts to reverse. And what is our time? We're looking at 2 hours here, so probably even scale it back a little bit more to even shorter interval. But to see that start to reverse there, and there would be an entry on that next significant bar down. And I guess people know what a significant bar is. It's a bar that travels a fair distance and has volume behind it. So I think we'd be adding there. What's your idea?
Um, I would probably just stay with the original unit that we have. If this is our point of entry right here, with the stop loss somewhere here, um, probably just moving the stop loss closer to the actual point of entry. So moving it here, because we've covered quite a distance. This seems to be a natural place, to stop. Multiple times we had that type of stopping action at this level. I think there might be an attempt to go up, but as you said, there is not a lot in demand signature. Even though demand's efforts are increasing, I wonder if we're going to produce even, some kind of rally into 134 area here. If we do, that could become, another opportunity to short. The way how the price moves down, even though it looks like it's an aggressive move, it still does not have this type of climactic characteristics. So I would be looking for, any type of sign of stopping action, change of behavior, for us to close this position, as we're thinking this is just probably just a swing position here. Okay, well, let's go further with this. Okay, so we're just falling right away. So there is really not a lot of places that were there where we could open a position. Only maybe on the intraday level, we could continue with the momentum trade there. Okay, another fall, and this looks more climactic as the volume signature increases, and it increases also into the body of the previous climactic action, which was the stopping action. And as we compare these two places, and Franz, what's your assessments? Could we say that this is the climactic action, this is the stopping action?
Well, spread is one of the indications of result versus effort. And the spread in this bar relative to the analog bar is obviously just a lot different on a little bit less supply, but it certainly shows that supply is having much more difficulty pushing price down on this bar than it did at the analog place in the previous downswing.
And we're coming to the support area right here. So it's natural to have some demand behind it. So some of the institutions are going to say, well, we saw the value here, so we're still seeing value at this point at the same price. So we're going to come in and we're going to, start establishing some of the positions. That might be wrong, and the price might actually tank through. In terms of our trade, we're still in this trade, and we're just using kind of like a staircase um, stop loss here, where our original stop loss was moved to closer to the break-even point, to the point of the entry. Then we could just use our significant bars and try to put the stop losses above the high of the true range. So we could have the stop loss if we are aggressive, somewhere here. Also, alternatively, taking some profits off, scaling out. So let's just say scale out number one is highly appropriate. We've had some profit built into this position, and you want to allow this position to unfold and to come to some kind of conclusion, but at the same time, secure some profit that you already have. So scaling out at this point is okay. Okay.
Putting money in the bank is always a good thing.
Absolutely. And here's that stopping action. Here's that demand that is coming in at the support level. And look how, all of the technical analysis concepts are working so nicely. And now we are having the reaction that is of better quality than any of the previous reactions. So our tactic here for the second unit is going to be to get out of the position either on the test or continue with this position if it's going to fail further down.
So we're watching for a test at this point.
Ooh, and look at this. Oh no, I'm sorry. Yeah, hard to see here. So here is that drop, and it went into the earnings. So here is the earnings, a surprise, and on the surprise earnings, we are actually going down. So what does it mean? Reaction of the market participants is negative to earnings, even though the actual result was positive. So this is not very favorable situations. And this does look like climactic action now because of the true range of the spread. We would take the previous close. We could compare it to this bar right here. Still not as high, but the volume is definitely very high. So what does the volume says? We're just capitulating completely. Having said this, we are at the support level again, at the lowest level, and this is actually the lowest close in this whole area right here. So that's also very important. I would say that because there is still momentum to the downside, I would continue with this trade. Probably would move the stop loss for whatever remaining units we have to about 124, 125, something like this. Give it a little bit of a room if it tries to rally here. But if momentum's still going to carry us down, then maybe just to stay with the position until we see a much clearer change of behavior. So let's go bar by bar here. Okay. So Franz, what do you think about this bar?
Well, this is, kind of confirming that we are in an area where, price is attempting to be stopped. Demand is, in this bar, although we have not been able to move up, anywhere near even the middle of the true range of this last bar, but it's at least an indication that there is some demand present.
Some demand is present, and that's okay if we take a little bit more off right here. I mean, this is a very logical place for us to take it off, and it does look like this climactic ran down. So let's just see if momentum's still going to be pushing the price down. Okay, so we see how demand is reacting. and how it pushes the price up. Let's see what kind of rally we're going to have. Okay. What about here, Franz?
Yeah, here we made a slightly higher low. We've been able to overtake we're getting well into the middle of the previous gap. So, and demand is still present. It doesn't. This last supply bar was, like you're indicating there, quite a bit lower. So, I think I'd be scaling out of this position pretty aggressively at this point.
And I think that the first scale out is here, as we've done. So that shows that, move to the downside, but it's not as climactic as this one. So this is our second attempt to scale out. And then on the actual test here, we could scale out for the third time. And let's just leave, one unit. Let's just say the last unit, unit number 4, with the stop loss somewhere. So all of our units are profitable at this point. We have taken the profits on 3 of them, and we're just leaving one small unit just in the event that there is some kind of further collapse, and we just want to be taken out by the stop loss. Okay, let's see what happens next. Still in that position, let's assume. Okay. Another collapse, another big volume signature where definitely demand is present. We see that in the tail, and we see that in the volume signature again. We're in clearly defined downswing. We still within the body of the downtrend channel, but we are in the oversold condition. And now this looks a little bit more like the actual climactic action, because it kind of reminds me, Franz, of this bar right here, where we're coming in, the volume is very high. In this case, it's super high, a massive climactic volume signature. And then there is a lot of volatility at the open. There is a gap. And then into the close, we have some kind of demand bar right here. Some demand tail. And we see that also in this bar as well. So that looks a little bit more like the actual stop in action. So we'll just have to confirm. And I would say that at this point, we could potentially scale out more. Let's just see if we're going to have some kind of test before we go up. We could scale out on the test itself. And if the price still continues going down, we're just moving the stop loss. So at this point, I would move the stop loss somewhere here. And that would be the lowest price that we're getting out. I think we got out here, here, here. So still kind of the same range, but let's just see if we're going to have that rally. Okay. Very interesting how this unfolds.
It's interesting too that it's finding that support around the 100 level.
Yeah.
It's sort of a psychological line in the sand that a lot of investors are looking at.
Okay, so the next bar gaps down on the open, tries to rallies into the close of the previous bar, and has a high volume signature. So still some supply is present, but demand is there too. So we are, probably somewhat close to the actual low, or we've just experienced it. Okay, and here is that change of behavior where now we are actually able to rally. And this rally is a little bit better than what we've seen before. Look at this rally right here of, what we thought that maybe could be a climactic action. What about this rally right here? This is much more dynamic rally. Again, I'm not going to move the stop loss. The last unit, usually I would allow the stop loss to go until it's being hit, because in a lot of cases, you will be, somewhat guessing where the stop in action is, where is that test. So we would want to go with this position, with the last unit as long as we possibly could. But we're definitely observing, some changes of behavior. Here's the confirmation of that, and we would be getting out of this position on the stop loss. So this was a really good place for us to get rid of our last unit, but again, by the rules that we have, we want to allow the price to go as much as possible. Well, Franz, obviously change of behavior, this is the largest rally in this downturn. It definitely has some demand. Demand has come all over in this area right here. So what could we potentially expect from the structure right here?
We would expect some sort of automatic rally potentially that might carry us even farther than we are right now, and then potentially a test of that and some sort of a trading range develops, or is this downtrend that we've had steep enough that we might even have a more kind of an absorption move on the way up, where people capitulated on the way down and they capitulate back in as price recovers.
Yeah, there is so much momentum to the downside where in some instances we would have a recovery like this, where we have an automatic rally and then we have a test as a higher low. So that is a possibility here as well. So we could have some kind of rally here. If we would go into the test in action at this point, and the tape would show that supply is being diminished and demand is absorbing that supply, I think that there could be some kind of swing trade into the at least one half of the trading range into this target, and we could play that. So let's just see how that unfolds. And it's important to see the overall structure as well. So always look at the larger structure.
It's easy for me to get myopic and just look at the little trading range that we're in without, as you pointed out a couple times in this exercise, going back and looking at previous levels of support and resistance.
All right, well, very interesting spot here with, we've talked about some testing. If we would look at this point, supply is definitely exhausted. There is not a lot of supply left. So, and that suggests some kind of continuation, at least 1-to-1, something like this into 135 area. And I think that the key here is just to understand whether the price is going to travel there right away, or are we going to have a more meaningful test, and then we're going to, travel up. So at this point, just because, if we're targeting maybe like even this area 140 from 122, this is not a very favorable trade. If our risk profile is going to be with the stop loss somewhere here, so we might just not even participate but observe and just see whether our assessment was correct. So let's just see whether we're going to have a much more deeper test or a continuation. Okay, and you could still trade this, and it looks dynamic, and it looks dynamic enough for us to think that, we've recovered from that decline that we have had. So let's just see what's going to happen with the reaction. Okay, so Franz, when we look now at the structure and the rally off the bottom, what are we thinking here?
We're seeing some ease of movement up. We're seeing an attempt of supply to come in and test this, and it doesn't really, percentage-wise, what are we going down there? Maybe a third at the most of the move off of the bottom. So at this point, I would be starting to get fairly interested in
Mhm.
this as a potential for some continuation. But um, you know, I think that's my take. You might have a different one.
No, I actually have kind of the same thought here. So the rally is dynamic. The rally does not have supply characteristics, and supply comes around this area right here. So this acts as a change of behavior relative to the previous rally off the low. So we know when the change of behavior happens, we might go into some kind of trading range. So I think this is where the value zone is, like this potential trading range. Look at where before we've stopped. Look at the previous trading range right here. So whatever supply we have had on the way down, which by the way was different than this supply, even though it was much more of the supply, it still did not produce the same type of velocity on the way down as the previous move down. So if we would be just comparing the characteristics of the price declines of, let's say, reaction number one or reaction number two, we could see that, there was the selling was of a different quality. And as we go below into the climactic action here, we're actually creating another potential sprint situation. Uh, and after that
Mm-hmm.
sprint, look at how the price recovers. It
Mm-hmm.
recovers really quickly into one half of the trading range. And then as supply comes back, it's not as much as there was supply before, and it doesn't produce the same type of movement to the downside. So I think that we're here probably in some kind of testing mode, meaning that we might be in the consolidation. And if this consolidation holds like it did here, then we might potentially have a rally out of that. So for now, I would just wait and to have at least another retest before we do anything, before we start thinking about, either position to the upside or position to the downside. Now here's a
Mm-hmm.
typical price action in the trading range where we just going up, then gap down, then going, look at this, how the upthrust result itself. So
Mm-hmm.
when you see this type of thing, this is just, a trading range type of action. When you see the excitement where the volume comes in, and this is on earnings, gets into the upthrust position, and then fails right away. So
Mm-hmm.
this confirms that we are somewhat in still testing mode. So let's just see where we should stop with this trading range to define the timing and the bias as well. Franz, so far, what do you think the bias is?
Well, the bias looks like it's bullish to me.
Okay, and why is that?
We're seeing, well, we have, we've moved, we had a rally into this. So the initial direction was up. Now we're consolidating. And if you look at the volume signature, there's less supply, coming in as we go from left to right. Again, indications of absorption. And when you look at the distance that we've traveled,
Mm-hmm.
within this trading range, we're respecting the supply area. I mean the support area. So it looks like it's got a bullish bias to me, Ramon.
Yeah, it looks bullish. I like how the demand actually was very active in this area, and we recovered pretty fast from the danger point. And that's a very significant development. It means that there was some urgency to get into this position by institutions. And then that uptrend was somewhat sustainable, was not sold heavily afterwards. There is some kind of demand that was coming in even after. And then on the current reaction, even though we go down, look, there is no supply there, or increasing supply, which is really good. And the bars are not expanding like they were expanding in this area right here. So I
Mm-hmm.
wonder if we could find some kind of touch or even a reversal of this support. And this could act potentially as a point of entry in anticipation that we finally going to overcome this resistance and this whole cluster, just because the supply characteristics are showing some absorption. Okay, well, let's just see if we could catch that. Okay, I like this sequence right here. So attempt to go down, and there is really nothing that the price can do. So my preferred style is always to have some kind of confirmation. So I want to see the close above the high of the last significant bar to the downside. It's very small in this case, and we could make an argument that you could, already start thinking about opening the position on these bars. They look bullish, but if we would have a bar like this with the close, that would be probably the first time where I would put on the probe. So let's see if that happens. Another attempt to go down, but look at how, again, the price recovers really quickly off the bottom here, right? So a threatening bar, what we would say, this looks bearish, but it is a bullish bar. Why? Because the result of this bar is very minimal to what the intention is for sellers. They want to push the price below this level right here, and we just basically stop in even at the slightly higher support level here, and then touching the major support. But look at what kind of bars we have. Those are just very, very small spread bars, and they have expanding demand characteristics. So demand is coming in, and we would move the stop buy slightly below to this level. So here's our first point of entry. You could also enter at the close itself, and we would be probably thinking that, well, is it a potential phase C in this smaller trading range out of the potential phase C of a much larger trading range where we had a spring and now we're in some kind of testing action. And again, we are just combining this Wyckoff price structural analysis with the tape reading, where we're trying to define the position of the price on the tape and on the chart relative to tape reading techniques. Okay, well, let's see if we could add to this position, Franz. I'm going to rely on you right now, for us to see if this is bullish and if we could add more. And let me know where.
Probably right here.
Right here. Okay, so what's significant about this?
I just like the fact that we don't have any supply really. We're still within the kind of the midst of this range, and we've had a bit of a reaction, and I think that the movement is higher. So on this little gap, on this little gap bar, maybe I'd wait for a confirmation above this area, because it is pretty close to the last buy. So yeah, probably right there, but I put a stop buy.
Okay, stop buy right here. Okay, we'll take that. Yeah, so this bar where we see the increase in the volume signature suggests that some demand is coming in, and suggest a continuation. This bar is not necessarily extremely bullish bar, but it's in the direction of our bias. It stops at the resistance. It has smaller demand characteristics here, some tail here, but it tries to overcome this area. And let's just see if we can. So I think the stop buy here is appropriate. So we could definitely do that. Let's do exactly that. And here is that reaction, but we're going to talk about this drop in a second. So initial bar shows that demand is of lessening quality. So we are trying to see if we're going to have some kind of reaction, if we're going to react to the downside. And we do after actually what I believe is another entry here. So let's just be correct on that. So we have two entries, and usually I would do 1 + 1 + 1 + 1, so 4 entries to get to my normal size. And then you could have additional overweight add-ons if you think that this is the position that you want to overweight. So we're going to do exactly that. So at this point, we're not fully risking, a full-sized position. We're still thinking that this is a bullish case, at least the trading range. By the way, let's assume the stop loss placement. So usually Wyckoff would say 2 stop levels away as your catastrophic stop loss. So obviously the first support level is here, and then the second support level, I would be looking at some of the expanding bars that we have on the upside. So probably this area, this is where they kind of like started buying again. So somewhere slightly below 120 as a stop loss. And again, the stop loss here is a little bit big. Why? Well, because we are thinking about more of the long-term campaign here. And the reason why we think long-term campaign is because causality is actually, quite substantial. So we're thinking long-term. So let's just see how whatever supply comes in, what kind of result do we have? Well, obviously we're still within the formation, within the trading range right here. So this could stop, and we'll need to see whether it does. We need to see some kind of test, and then continuation up. This could become phase C with, increase of the volatility, increase of supply. So let's just see. Okay, a very interesting development. We are going below the trading range. Let me remind you, our stop loss is just below 120. And then we're committing on a single bar below that support. Please note that the volume signature is actually diminishing, so supply is diminishing on that break to the downside. And then almost instantly the price comes back into the trading range. So this is a sprint type action, a temporary commitment down and almost immediate recovery. What we could do here is actually put another unit on, preferably on this bar, but let's just say that we are buying somewhere here in the middle of the range. So this is scaling in unit number 3. We are not fully in the position yet. We need just one more unit, but this is a very favorable development. So let's just see what happens next. I hope the sprint, does not fail. But the volume signature seems to be like very low. I mean, if we would look at the whole overall volume signature and would compare it like to the likes of these declines, definitely supply is more under control by big hands, strong hands, and we're still in this trading range after this rally, so we're not giving up a lot in price. Okay. Another possible test, and right here I would probably, after the high low and seeing the supply go down, this is another opportunity for us to add to the position. So this is our scaling number 4. All right, and from here, from phase C, we want to see a confirmation now. Now we are fully in the position. We want to see a confirmation that price now is able to overcome 136, 137, and maybe 140 as well, and to touch this level right here around 150 in some kind of sign of strength manner, and then after that go into some backing up action before continuing to the upside. If that's going to happen, we actually might have some add-ons on the backing up action itself. So let's see. Okay, well, I like how it approaches the resistance. This is probably one of the best rallies that we've had so far. A very interesting bar right here.
Upthrust bar. Maybe it's a probe.
Maybe it's a probe, yeah. So I'm also thinking this way. Would the price hold this stride of the upswing, then we probably will have some kind of resurrection above this bar and continuation. this would be a very bullish scenario. So the price is testing higher ground, still has some supply at the level of the resistance that needs to be observed. So supply came here, supply came on this climactic run, and we kind of seen how supply came right here off the attempt to rally. So would it hold here or not? Another thing here with the tapering is that we always have to think about the character with which the price moves. So look at the little bit laborious type of move where the price goes up and there is always reaction. So not the most favorable character for the sign of strength. We might have some kind of reaction back, and then more of the consolidation. So we'll have to see. But at this point, I would say I would wait, would not add to the position, and just go with one way or another. Okay, so here's this attempt to produce another reaction, but look at how supply is so mediocre. Okay, I like this. Again, recovery into the resistance. So there is an attempt to react and failure. But demand is also not that great. So we're still vulnerable to have some kind of reaction right here. I would say if we are going to decisively break this 140 level, this could be another add-on here. And I like those add-ons after what we would consider a backing up action. So I wouldn't be shying away from a breakout trade right here. Usually breakout trades are not my favorite trades, but in this position where supply is being absorbed at the high level, and look at how this
it's so tight.
Yeah, tight and staying at the resistance level. So possibly could have a continuation, but you always have to pay attention to the opposite force. We're talking a lot about the supply, but what about the demand? And here the demand is somewhat poor. And because of that poor demand, we're still, vulnerable here. So here is that reaction.
Still some supply.
Okay. So we're still in the trading range. We are fully in this position. This rally right here had poor demand, and we said that we are vulnerable for the reaction. So with the reaction, we just need to see what kind of character of the reaction we're going to have. So Franz, what would we say about the reaction itself?
The reaction did not carry us back down yet anyway to the support level. It did have it had at least two bars where supply tried to dominate, and there's pretty decent demand's ability to overcome it, and then another little test, and then interestingly, the effort versus reward on that last little test there is, it just shows that the demand might finally be becoming stronger, because a lot of effort there to go down and it just doesn't go anywhere.
Yeah, high or low. Highest volume signature is still on this lower low. And we have some kind of increase in the volume signature right here. So this could be indicative that, we might picking up the last supply by strong hands. And when we do that, the price might actually start moving up and overcoming, all of the resistance clusters. So this could act as a time, and this could actually be, the last phase C testing of the support level. Let's just see if that's the case. I mean, we could have maybe a little bit of a local trading range right here, but this whole area could become that last test. Well, let's see. If that's true, then, maybe another opportunity to add to the position. And again, we're thinking more about long-term rather than short-term swing trades. I like how the price is holding here. I like this breakout. Okay. Look at these bars. This is very interesting. So we were observing how supply comes at this level, and we wanted to see what kind of reactions we're going to have. So first reaction, pretty steep, but not a lot of supply. Second reaction lasts a long, and also goes to the support level. Third reaction, actually quite aggressive, not relative to what we've seen on the down moves, but still makes a lower low on the increased supply signature. Then the next reaction takes a long time and doesn't really go down, on a lot of the bars. And when it does go down, the supply is not that great. So, selling is exhausted at this point. And then we finally seen some pickup of the shares at the level of the support. And as we come next time to this same level where we had all of this selling going on, the supply signature slightly increases, so there is some supply left, but look at how the price holds. So this could be, our final absorption. So let's just see if that's going to be the case. Although the spread to the upside is not that dynamic, so we'll just see. But could we break out here? Okay, I like how the price kind of like stays here. Another interesting bar right here, which reminds me of this upthrust probe bar. So, and in this case, look how different the outcome is. Supply comes, but the test is different on the day after the probe. And this is basically an indication that most likely we are in the breakout mode. So a sign of strength, great. And obviously, this bar right here on the breakout is a confirmation bar on its own. And right now, I thought this was great, so we were thinking that this is finally a potential phase C just based on the volume signature and how the price behaves here. So really good call right there. We are in a sign of strength, and we are trying to do the backing up action. There was a lot of supply that came on this bar, but the key is going to be the testing action. What kind of reaction we're going to have. And we are fully sized at this point, so we probably would be looking for add-ons. And by the way, I forgot to say that we should have had the add-on somewhere here, Franz. At this point after the, so this would be the add-on number 5. We were analyzing, but I was not even thinking about, all of those add-ons. All right, so we're going to speed it up a little bit and going to finish like in 5 minutes or so. Here's that backing up action. Everything looks bullish. And I like how after this bar, we are not negating this bar completely. We're not committing below. And then on this smaller demand signature, we are actually making a new higher high. This acts as a sign of strength. So we could potentially, add either here or even on the breakout of this bar, because if this is acting as a sign of strength, the backing up action, a breakout in the backing up action makes a lot of sense because supply has been observed not only at the level of the support, but also at the level of the resistance, and the movement after that could be, favorable. Okay. Would take us in as the last unit. And let me just increase the speed, and we're going to finish this exercise really quickly. So here's how the price starts to move. Here's our next point of entry. This is the last point of entry, so our entries were like this. Okay. 1, 2, 3, 4, 5. And you could have opened, these positions here as well. And at this point, we're just trying to stay within position. We're breaking out of a much larger structure. There was an opportunity to add here on the breakout as well as a swing trade. And at this point, we're just staying in this position. So friends, I'm going to speed this up. Let's just capture the change of behavior where potentially the trend ends. So you tell me where.
So it looks like absorption on the way up. Keep going.
Another trading range.
Yeah.
Nothing really there.
No.
I mean, if we would look at this range right here, initial change of character after the climactic run did not have elements of the supply or increasing supply. And then the next rally was somewhat dynamic, and the next reaction had some selling behind it, but the majority of selling came on the first bar, so this looks like more of the profit taking. And then the second leg to the downside did not have supply signature, and it stopped at the support. So again, a bullish characteristics, and we could add to the position somewhere here.
Yeah.
And we're just trying to figure out with Franz exactly where the change of behavior would be.
Okay, that is starting to look a little bit climactic.
Climactic, definitely. So a lot of the volume
So
signature.
All of a sudden our antenna are becoming a little more sensitized.
Absolutely. So we need to see some kind of meaningful change of behavior. So continuation to the upside, still staying in this position. Okay, how about this?
That looks pretty climactic.
Yeah, so look at the verticality with which the price just goes up, and then the highest supply bar comes. I mean, we've had something like this in this range right here. Nowhere else really. I mean, there's definitely a supply on those volume spikes, and this is where the price stops moving up for some period of time. But relative to the historical analog, still, this is not the highest. So let's just define where the change of behavior reaction happens. And this is where we're going to say that we are done with this move. Here?
Yes, I think so. That reaction off of 360 down to 320, I think is the biggest reaction anywhere in the entire.
Yeah, and you could definitely, we should be adjusting a little bit to the logarithmic scale here just because we've traveled so much from $100 to $300. But this looks a little bit as a change of behavior on multiple levels. Well, first of all, the climactic run itself. Secondly, we have a small distributional range right here that suggests that we're going to have a reaction. And then look at 1 day down on somewhat of a relatively high volume signature. But because this was a leadership stock at this point of time, we could think that institutions do not want to give up this position, and therefore initial change of behavior is not going to be big, and therefore this is what we're seeing. And I think that we're done somewhere here. This is where the area where we would be start considering exiting our position, scaling out. So let's just okay, yeah. Another thing with the change of behavior is that it is suggestive that we're going to go into some kind of trading range environment. So the trading range will be defined by the buy-in climax and automatic reaction boundaries. So here we are. So our exit could be here on this bar. Our exit could be on the next leg up. And basically we're just thinking here either getting rid of the position step by step, or seeing what kind of bias the trading range would have at this point. And let's just stop the replay and see where that was. So here's this change of character that we've talked about. So our exits could be here on the way down throughout the whole trading range. So preferably in phase A, early phase B. Or if you're still holding throughout the whole trading range, then your exit, the capitulation exit will be here where supply comes in in big bunches. All right. Well, Franz, good job, and thank you for going through this exercise. I know how tedious these exercises are, and usually it takes more than 30 minutes, and we spend almost like 45 minutes on this. Uh, so this is something that you will do in the course with multiple teachers. This is something that we do in our classes as well. If you are interested in this type of the material, so sign up to the course, and we will be happy, to go through those principles together. Franz, again, thank you so much. Great session. Something unusual.
Thank you, Ramon. It was great. And I'm definitely going to be attending all 3 months because I still have a lot to learn.
Sounds great. Thank you so much, guys, and until next week.